Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Monday, July 18th, 2016, and this is the Daily Report for Gold and Silver. We do have moderate downside pressure in the precious metals market. Gold, we're first looking at spot, trading off about $8, $13.29. Of course, that's when you compare it to Friday's close of $13.37. We can also look at COMEX. This would be basis the August contract, $13.29, but you see the net change is different. I believe that's because they're comparing it to yesterday's trading activity. The low, $13.23, and the high on the day is $13.36. Silver, also trading lower on the day, but oddly trading above $20 per ounce at $20.04. Low, $19.72, and a high of $20.22. So we've had a fairly significant range on the day when we look at silver. Let's take a look at our first chart of the day. So traders, the key element that I am attempting to discern at this point in gold is at what point we can consider this most recent sell-off concluded and we can return to rally mode. First chart that we're looking at is a simple daily chart. It is in Japanese average format. Japanese average format tends to really filter out so much of the noise, although it always lags behind any information that we'll get from a pure candlestick chart, but you can absolutely see these waves that we have, and as we go into these waves, you can absolutely see a color change, and B, and most importantly, you will typically get some sort of a doji-like candle at that pivot point in which the market turns. You can see that right here at about 1208. This is when the market, of course, went to 1200. Market then moves up. You can see these pivot points right here. Not so much here on these small downturns, and that's one thing that we do want to pay attention to. You also absolutely see it here. But the one thing that we are seeing is the fact that as this market has drifted to lower pricing, down from just below 1380, candle size has gotten much smaller. Body size is gotten much smaller also, and that's what we look at. But there is still no point in which we're seeing that upper wick. Now, you did get that on one occasion on this way down, but we are starting to see some of the signs that we will typically look for that are telling us that we are currently at a pivot point, or in this case, the conclusion of the current correction. So I turn your attention to this daily chart, standard candlestick format. We have been using this chart quite a lot over the last couple of months, but my basic take on it, as you know, is that we really began a impulse wave when we concluded this wave 2, and we are now in the throngs of a wave 3. Of this wave 3, my latest model shows that we've probably completed the first 3 legs, waves 1, waves 2. This is probably our wave 3, although wave 3 could still be intact. We'll have to see. We're probably in a wave 4 scenario. If we conclude at this point, this is at 1330 area, we would then look for a rally up. If not, as I said, I believe we could see this market move as low as 1300. That would be a 61% retracement of this move right here, meaning 1254 to 1378. So we're either going to drift lower and then clip up, or find support here and clip up. And that's what I'm really attempting to determine at this point. Now, we have broken through this critical area, 1330. These are one of the 2 areas that we've identified, but on all occasions that we have broken through on a daily basis, we have closed above that price point. To me, that's pretty significant. So we've had hard breaks. We had this market trading significantly lower, I believe to about 23 in intraday trading last night, but we're currently trading at around 29. Now, we're certainly not out of the woods yet because we're still seeing red candles. We haven't seen anything that was any potential pivot point except for the first day that it actually came in. This was last week, of course, formed the piercing line. I made the recommendation that if we got follow through, meaning we got a confirming candle, we would go long. We certainly didn't see that. And the market has been drifting lower. But again, body size is reducing, meaning the range between the open and close. And that tells me that the market is absolutely consolidating. Lastly, I do want to take a quick look at silver. Silver off almost 0.75%, 20.04. Off about 15 cents on the day. This is a weekly chart, and I like to definitely look at weeklies in silver because it is a more thinly traded market with less volume. But we had this tremendous spike here, which came up over this 20.74, this being a 61% retracement, pretty critical area, and it is the area that I believe if silver cannot take out on a closing basis, that it will provide us on a technical basis with a level of resistance before it provides us with the ability to break through and it becomes support. Now, silver has spiked up tremendously. If we see gold begin to show signs of a bottom formation and support, I believe would have silver moving up in tandem. And as I said last week, I absolutely am considering adding silver to the mix on our next trade, although I am a little leery about going long silver in this particular area. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.